And welcome. It's Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. And quite a week we've had here, like lots to cover. Let's go ahead and take a look at what we are going to be reviewing today. As usual, we will go ahead and take a look, see where the broader markets landed at the end of this rather tumultuous week. And then, of course, we will look beyond that to take a look at some of the underlying movement taking place within various sectors and industry groups as well. We'll also take a look at areas that are faring well. It's certainly the second half of this week has been rather difficult, and share with you why. This is all with an eye toward future potential movement and being aware of areas that are not tumbling with the markets. And then high yielders with attractive charts, that's going to be part of those areas that are faring well. We'll take a look at a few of those. And using history as your guide. And this is always relevant when you are investing, but particularly when significant, I would call them, events are taking place. So we'll do that as well. And so to begin, let's take a look at some of the more impactful news that really took the markets as a way of market movement taking place. So we did see, I'm talking here about Fed minutes that sparked tapering worries, but in essence, it was Fed Chair Powell, as well as one of the Fed governor's comments, that really shook the markets up. Inflation and interest rate fears remain at the forefront as far as driving market price action. Of course, geopolitical tensions are weighing on the markets. There was talk out of Washington today that a Russian-Ukraine activity is all but imminent going into next week. So we'll look at the impact there. And I did mention earlier about Fed Governor Bullard's comments. And in particular, they were talking about really ramping up the interest rate to the point where he was anticipating a 1% rate hike at one of the meetings as we move toward the middle of this year. And that in turn, of course, did get investors rather concerned. And then consumer confidence, that number came out today, and it really was rather eye-opening. Confidence fell to a 10-year low, and inflation fears rose to a 13-year high. So a lot of extremes taking place, but in essence, a sense that the consumer, which drives GDP in the US, may very well pull back their spending because of the backdrop. So let's go ahead and take a look, dig right in, look at the broader markets. Here we have a daily price chart of the S&P 500, and we can see today's price action. The S&P 500 was down about 2% today. A lot of that geopolitical news, but also the comments relating to interest rates being ramped up quicker than anticipated, also driving the markets lower. So we can see that the S&P 500 closed below this 200-day simple moving average. And all of that, of course, driven by the high read in the core price, consumer price index, which rose very dramatically. So a break below this 200-day moving average is not a good thing for the broader markets. I've mentioned this in the past when we had that occurrence here back in late January, that this does not occur very often. I'll just go ahead quickly here, pull up a monthly chart, and it's going to be, actually the weekly can be equally telling. And what we are looking here is a period certainly going back to the beginning of 2021. You can use this chart and go back and fill in other various time periods. As far as going back, we can go back 10 years on this weekly view, and we'll see that a break below this 200-day simple moving average. This is a daily price chart, and the times that it has occurred has really foretold further downside. So let's get back to where we were, because I did want to share with you some other characteristics that are taking place here as the markets into the close of the week did deteriorate. So we can see the RSI is now negative. That is a relative strength indicator, a momentum indicator. Of course, during your healthier uptrending periods, it is going to be above that net neutral 50 and trending higher. So another negative signal here as well. Now, interestingly, I am going to go back and pull up the stochastics here and share with you, this is a faster moving momentum indicator. We're still up here in positive territory, but heading south. Overall, not a good look here for the S&P 500. Let's go ahead and take a look at that faster moving, certainly during bullish periods, high growth NASDAQ composite. And we can see that any evidence of this potential reversal downtrend that was seemingly taking shape into the midweek period this week has evaporated. The NASDAQ has now closed below these potential areas of support. So certainly going into midweek, we could see that the shorter term 10-day simple moving average had crossed up above this 21-day simple moving average. That was a golden cross, and it's really an beginning stage action that can signal, again, the beginning of a potential downtrend reversal going back to this October period. This certainly is what we were on the lookout for, but price action going into the close of this week has negated that. We're now down below both the 10 and that 21-day simple moving average. Your RSI is negative as well. So not very constructive. I talked about using historical precedents to guide your investing going forward. And certainly any attack that is being talked about as imminent would provide further downside pressure on the markets. So next week could be a continuation depending on events. So let's go ahead and drill down, take a look at those 11 sectors in the S&P 500. I've gone ahead and added that relative strength indicator. We want to see what areas are relatively underperforming these broader markets. So up here in the forefront, we can see energy, and it was the only sector up this week, almost 3%, continued uptrend. This is all about the geopolitical tensions between Russia, Ukraine, a lot in the way of sanctions that may take place if Russia does in fact take action. And in turn, that will squeeze, and it already has, there are sanctions against Russia as it relates to oil and other commodities. So we are seeing a uptick here in energy stocks. We'll get a little bit more into that as we move on. But other pressures also as it relates to the supply of oil being rather low, and that's anticipated to remain in place. So from here, we can see that financials are up here in the forefront. They did fare a little bit better than the broader markets, down 1.4%. The S&P was down 1.8% for the week, but holding support here at this upward trending 10-day simple moving average during this period where rates are anticipated to be increased. Financial stocks can fare well, and we'll delve into that further as we move on here as well. And then beyond that, we can see staples, and certainly this is a defensive area of the markets. There are two staples areas that did well this week, and I will share that with you, as well as individual stocks that are really holding up quite well. As we move further down the chain, we're talking about that relative strength. We want to be aware of areas that are potentially underperforming, and certainly up here at the forefront on the underperforming side is technology, down 3% today. Interestingly, did hold support here at this. Actually, it just dipped below into the close. We did have selling into the close today, but it is hovering around this 200-day simple moving average. We'll drill down into those areas, seeing the most in the way of selling as we move on. Higher interest rates are not good for technology stocks, but also we have that overall broader market uncertainty that is pushing investors to safer havens, if you will. So from here, let's move on, take a look at some of the other underlying industry groups that can provide us a bit more in the way of insights as to what is taking place in the markets, certainly this week. So again, that RSI with these various indices. So here we are with Brent crude oil up here at the forefront. It did peak at $94 earlier in the week, but up above that 90, a very elevated level. We talked about what is happening, the dynamics there with energy and certainly oil prices as well. But from here, we can also see a big spike today in gold shares. Actually, big is relative. It was up 2%, but this is in a period where the broader markets were really getting hit. So another safe haven play there with gold. We can also see the yield on that 10-year. Now, this move here was all about that super high inflation reading that we did get earlier in the week on Thursday, which in turn pushed yields higher in anticipation of the Fed taking action to raise interest rates. So let's take a look at other areas that were on the rise this week. Volatility back on the move. And it really was refreshing last week. It dipped down to about 18. So it was looking really promising as it relates to the concept that the markets may have been calming down a bit and really allowing a potential reversal. But we did see, of course, a spike into the close, indicating that is also known as the fear index. So we talked about financials, which slightly outperformed, down a little bit less than the broader markets. And here we are with that regional banking ETF. KRE is the ticker symbol, and it really had a nice rally going into midweek. We are finding support here at this current time. We are going to keep our eyes on this RSI as well as the MACD, because this week we did get that nice black line up through the red, indicating that that downtrend had reversed. So keeping a very close eye on here. We have a couple of bank stocks on that MEM suggested holdings list. And we, of course, will want that group to hold in to signal further upside there. So as we move on, I talked about sharing with you areas in tech that got hit, and semiconductors got, I can only use the word walloped, down 5% today, breaking back below this 200-day moving average, and relatively high volume on this drop. And we can see your momentum indicator, RSI, dipping back below that 50, and then your MACD, which had signaled a downtrend reversal crossover, is potentially heading lower as well. We can also take a quick look here at tech, another heavyweight area. I'm sorry, it's software stocks, another heavyweight area in tech that had been potentially so promising, looking as if it could be on its way to finally move closer to potentially reversing this downtrend. And this area too did get hit on selling 2 days in a row on heavy volume. So we'll see where this lands. We haven't reversed this yet, but it's certainly not an attractive chart, to say the least. So from here, I am going to take a very brief break, and we have lots more to cover. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I'm going to jump right in and share with you areas, stocks in the markets that are seemingly holding up. Now, certainly we could review any number of energy stocks. Let's take a look at, we will start with one, and it is PBR, and it is a Brazilian energy producer or oil and natural gas producer. And I'm pointing this stock out as it relates to other energy stocks being attractive for two reasons. One is we did have this nice base breakout today, but the stock is trading at a multiple of 3 times trailing 12-month earnings, and that is super low. Also, it offers a 13.9% yield, and actually StockCharts has that yield at over 14%. So super high yielder. And Brazil, we can just take a quick look at EWZ, which is the ETF that will share with you the broader, how the broader markets are doing. This is Brazil ETF, and we can see EWZ has been in a very nice uptrend, broken back above that 200. So you have country specific dynamics also supporting a continued move into PBR. From here, we can take a look at a couple of other stocks, and as we progress, I will share with you why they are faring well in an otherwise difficult market, because we want to have, I do, always want to know, is there possible for that upside momentum to continue given why they are faring well now. So here we are with Alcoa. AA is the ticker symbol. And we can see that the stock broke out of this nice 2-month base and is now in a confirmed uptrend. The company did come out with earnings. And also, as a backdrop, aluminum prices are certainly are currently at the highest level since 2008. There's also reduced aluminum production in China. And then also geopolitical sanctions against Russia are impacting that high price in aluminum. So look for an anticipation of continued upside there. This particular also dynamic is when inflation is on the rise, such as we saw with last week's surprisingly high number, you will see these commodity related stocks historically fare better during periods of high inflation. So here we are looking at a ETF before we looked at individual stocks. This is COPX, and it is Global X Copper Miners. And we can see that it's in a nice uptrend there as the ETF is breaking out of the space. So that's for backdrop purposes, another commodity related stock on the rise. So from here, let's just take a quick look at a couple of stocks that traffic in copper and other areas. This is TRQ and the Turquoise Hill Resource. Oh my gosh, my tongue twister today. But this is a company that is involved in gold and copper mining. So a couple of dynamics at play here. You're certainly not early, but I wanted to share it with you because despite this run up, the stock is still trading at 8 times earnings, a nice low multiple, and we can see it is in a very nice confirmed uptrend. TECK is another company that also is, in addition to gold and copper, has coal. I'm going to share with you a coal name as well, but TECK. So this is all in line with that anticipated continued move into commodity stocks, and another low PE name. So from here, I did want to share with you a metal and mining stock. This is Rio Tinto, RIO, a play on that, again, move into these commodities. We can see that this black line up through the red with this uptick this week is signaling that this pullback here has reversed. We are now in an uptrend. It's a little bit extended given this extensive run, so I would look for a pullback, but certainly worth noting. A UK-based metal mining company here, VALE, and actually Rio is UK-based. This particular company is Brazil-based, and it has a 15.2% yield very nice confirmed uptrend. Again, another metals miner. And RIO actually has an 8.8% yield. So the higher yielding stocks also fare well during periods of high inflation. An Australian metals mining company, BHP, 8.8% yielder in a nice confirmed uptrend. So let's go ahead and move on. We can take a look at some other areas that are faring well in this current environment, always with an eye toward potential continued momentum. So I talked about coal very briefly, but this is BTU, Peabody Energy, and the company is anticipating, or they actually have 72% in the way of year-over-year revenues. They just reported yesterday. You can see that gap up into a base breakout. This is very unlike what we're seeing, of course, elsewhere in the markets. And coal products, they saw that huge bump in revenues because their coal is used to two things. One is to make steel. We talked about the increased steel usage, aluminum prices all hitting highs. And then also coal is used for utilities. And these utility companies have been able to pass on the higher coal pricing as utilities are increasing. We're certainly seeing it here in LA as it relates to our gas, 3 times higher than normal, that gas bill. So feeling the pain. So here we are with oil services sector ETF, OIH. I'm pointing this out because as energy stocks have rallied, a lot of the oil producers were in the forefront, but we are seeing a pickup here with these oil service providers. So let's drill down, take a look at a couple of companies here. NEX is really on the move. The company does oil well production services, bit of a smaller company, but take a look. It's extended, no doubt, but they are anticipating 160% in the way of earnings growth this year. So on the move. We can take a look at another, this is a company that is an oil production services company in Canada, Australia, elsewhere. So a couple of the attractive dynamics here as the stock breaks out to a new high. It does have a multiple of 5 times, and lower multiple stocks are also, I'm pointing these PE out for a lot of these stocks because lower multiple stocks are going to be more attractive. You can see those tech names and a lot of the high multiple Tesla. We can take a quick look, did get hit this week, and the stock does have really nice growth prospects, but it's all about those high multiple, higher beta stocks that are being sold by way of entry into some of these lower multiple. Let's take a look. Consumer staples. I talked about 2 areas that are faring well, and one is tobacco stocks. Now, it did have a big move here today out of this nice tight flag formation, and the company did report their earnings well above estimates. More importantly, management guided higher for this year. They're seeing a lot of use for their product that is a tobacco heating device that is really seeing a lot in the way of sales. And so we can see a nice 4.5% yield there. Again, we talked about that yield being a mover, being attractive. BTI is another tobacco stock. And again, we're not particularly early. This is more as a way to indicate which areas are faring well and why. So BTI, 6.3% yielder, also all about vape sales increasing. So I certainly did want to point that out to you. So from here, let's go ahead and take a look at some other areas that are on the move here and seemingly faring okay, given certainly the dynamics that we are experiencing elsewhere. So from here, I am going to go ahead and take us to some of these other actually share with you ways that you can uncover stocks that are faring better and see if they have potential going forward. So we're looking at this first page of StockCharts.com, and we can see the NASDAQ down 3%. The S&P was down 2% today, Dow down 1.5%. In fact, I will get into those Dow components in just a minute, share with you why the Dow was the best relative performer. It was down 1% for the week, less than half that the NASDAQ. But what I wanted to do is go over to these market movers, take a look at the stocks in the S&P 500 that were up today, and a lot of them were up by quite a bit. So I'm going to use this candle glance view. What we're on the lookout for are stocks that are outside of areas that we already know are experiencing strength. First up, we can see a lot in the way of energy, Baker Hughes, PSX, OXY from my MEM Edge report and other areas. But we can take a quick moment here and take a look at stocks that are not gold or energy and see if there are potential more upside. This is CF Industries, and what I wanted to point out to you here is this nice flat base breakout that is taking place today. I'm going to pull up this full quote, but this stock also, they provide nitrogen-based fertilizers and specialty chemicals, and it also is a play, if you will, on that commodity space because we are seeing food pricing. That was a big part of this past week's high inflation read, was all about food pricing being increased, and CF Industries has been able to raise the pricing on their fertilizers, hence their growth prospects. So we can see it's in a very nice uptrend, and hopefully you can see a theme emerging as it relates to areas that are bucking the current downtrend and potentially have further upside. So let's go back to that movement as far as stocks that were up today, and we can take a look at Northrop Grumman, NOC, up 4.5%. RSI now trending upward, and we can see the MACD black line up through the red. So from here, I'm just going to segue right over because Northrop Grumman is part of aerospace and defense related stocks, and this is one area that is holding in well, and a lot to do with government spending, not due to be impacted by other dynamics taking place in the market. So here is the Dow. We're looking at those 30 underlying stocks within the Dow. I went ahead and added that RSI, and again, strength to weakness. So let's take a look. I'm going to share with you just a couple of other areas that are faring well given market dynamics elsewhere. Again, we're going to move past those energy stocks. First up here is Travelers Company. Those of you that subscribe to my MEM Edge report, we have a couple of other very high quality insurance stocks. These guys fare well during periods of rising rates, so that is definitely worth noting. Walt Disney came out with high subscribership numbers. They came out with their Q4 earnings this week. Not a chart that I would touch. This is more just informational purposes that earnings, when they are there, are still potentially bullishly impacting. I talked about aerospace and defense. Boeing, not the best example, but what I can do is, well, we can take a quick look at Lockheed Martin. But most important, as well as seeing where that relative outperformance is, and Coca-Cola, a company that's been able to raise their price a little bit sloppy here, but consumer staples holding in relatively well. We want to be aware of those weaker areas, and we can see Home Depot, Walmart, Nike, retailers really under the gun here as consumers are expected to pull back. So I have to leave it there. For those of you that have not already, go ahead and take a trial of my MEM Edge report. You can use that link below. I'll keep you on top of these markets and indicate select stocks that are poised to really outperform given the sector rotation taking place. Have a great weekend. I'll see you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.